And good afternoon. Welcome into Market Talk here on this Monday, March 28th. Great to have you join us once again. Thanks for making us part of your day. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. Find all of our social media links there, all of our streaming sources, the latest news of agriculture, and much more. It's all online at MarketTalkAg.com. We had a pretty rough day today. Risk off across the commodity sector. A lot of moves to the downside with a broad sell-off led in grains by wheat and soybeans. Corn fared all right, though, today, but still in the red. We got plenty to discuss. Let's bring in John Heinberg with Total Farm Marketing joining us this afternoon. John, good afternoon to you, sir. Hope you had a great weekend. What a way to come back after a weekend, right? Just a lot of red on the screen here today, John.
Yeah, these Mondays are either feast or famine. The last couple of weeks now, it's been more on the famine side here. So, we saw things kind of break apart a little bit last night, and weakness in that crude oil market tied to some demand concerns. With the Shanghai restrictions kicking in for COVID, and so that just kind of broke that crude oil market $7 to $8 a barrel lower at one time during the course of the day. We saw that spill over into the beans. Obviously, that spilled over into the wheat market. Pretty, kind of happy the way the corn market hung in there. After a day like today to finish 3 to 4 to 5 cents down, realistically is a pretty good day. Again, just showing you, that there's some buying support in that corn market. But the other two, obviously saw some profit taken, some money moving the sidelines here. We got the report this week, and then we got the end of the month, end of the quarter also this week. So one of those windows we can see some money flow around.
Well, and just thinking about the way everything acted today, you mentioned some of that support under the corn market, and that was definitely evident with everything else. Just kind of felt like the computers, the momentum just took over with the broad sell off commodity wide. We saw some pressure in stocks as well here today to a degree, and the energies, as you mentioned, and just all that news, China, Ukraine out there. Worries about HPAI, more cases of that in the U.S. Just a lot of negative news items kind of fueled in, and the computers just kind of took over here today, John.
Yeah, very much so. Again, when you deal with markets that are as lofty as these are, the technical side can really kick in, and where the money wants to flow to. And as we saw beans and wheat kind of break some barriers, it was a chance for the sellers to push it, just a little bit in there. And again, looking at that corn market, still 660 on December kind of holds us in place. July corn 725, clawed back above that today, still holding around 750 in May. So those seem to be still some pretty key spots. I think we've traded May at 750 now, counting the open today, and the high of the day was that 18 consecutive sessions that we've touched that mark. So again, we're still seeing that consolidation there. Beans, yeah, it was kind of a difficult time. And this is that time of year that we still got to keep in mind. We got a South American crop that's harvested. Yeah, it's not as big as it's supposed to be, but they're moving beans out. So we're watching what happens to the basis and the premium down there with those South American beans, the U.S. beans. We've seen that kind of fall back the last couple of days. So that puts pressure on. We have watched also the Brazilian real rally against the dollar, which has been supportive. And that looked like that was a quieter trade today. So those things all kind of come into play here in terms of some flat out profit taking maybe coming in, because we still saw demand this morning. We had a Chinese sale for old crop beans. We saw an unknown sale for corn this morning. So even if prices drop back, or it looks like the importers still want to step in and secure some supplies.
Well, and watching as well, there's a lot of talk of beans and corn and wheat to some degree going to the Pacific Northwest to go to China, but also just some talk of logistical issues to the Gulf. Wheat I'm hearing a lot of talk about that here today. So, I mean, you think about getting this stuff to port to ship it out is another thing we're watching as well. And then you mentioned some of that competitiveness with South American crop and watching as well that safrinha crop. It's no time to hit the panic button yet, but there's some areas that still remain pretty dry down there, John.
Yeah, at least that second term's corn crop down there. Again, things are off to a good start, but there's some areas that are still going to be very closely watched. And, we'll see. Again, I've said this before too. The USDA is counting on that big crop down there. They've kept that number on the balance sheets for a reason. Now we'll see if that can materialize. That's going to be a late summer story if that starts really breaking apart down there. Obviously, we still got our weather to deal with, and realistically, there's probably not any weather premium built into the U.S. side of the market yet. Even here, on top of that, what are still the big macro things that are out there? The Ukrainian conflict with Russia, the war with them continues to be a headline, kind of fall into the back burner because it's just still going on. We had little talk that there was some shipment via rail to get some grains out of the Ukraine over the weekend. So maybe they're in the market a little bit. Still, obviously, going to be well under what the market needs in terms of overall supplies. So we're watching that. You briefly mentioned it, and it's been under the radar here in this corn market as well as even in the protein market, as this the case of the bird flu or the avian flu that's moving through the United States. Numbers are coming up to 14.5 million birds, and on record, that's the third largest outbreak that we've had in history. In a typical year, that would definitely come into this market and weigh on the demand side. So that might be a number that comes up on the report maybe next on this week, in terms of where we are in the grain stocks when we start talking about that animal feed usage.
Very, very true. Well, and I think as well as we look at Thursday, and there's a lot of people who are talking about the acreage numbers, and rightfully so, big numbers, but quarterly grain stocks too. And I wonder if that's maybe getting a bit lost in the shuffle. I mean, do you think the quarterly grain stocks number is just as important or more important than the acreage number coming up here on Thursday?
To me, realistically, with the demand side that's out there, where we are on the global supplies at this time frame, what we have available is probably going to be the bigger of the two numbers. The media and social media and everybody loves that acre number. That's just going to be something that we can start throwing in the balance sheets and put numbers together for next year. But if we come back and the USDA makes some adjustments on the stockpiles and we're low on overall supplies, whether it's down 50, 100 million bushels, we've seen those adjustments happen on these grain stocks report. You're going to see this market react very aggressively. And same thing the other way. What if they come back and raise it more than anticipated? At least in corn, that feed number is still the variable. Now, we didn't have the worst winter this year, so maybe we got some lighter feed usage there on the cattle and hog side. Obviously, numbers are down, at least on the hog side. Cattle numbers have been pretty consistent with last year. Then obviously, the avian flu or the bird flu coming through and doing its damage. Now, is that in this report? It's kind of accelerated more here in the month of March, and this is a March 1st report. So we'll have to see that comes in. Soybeans, that one's pretty no. We don't expect a lot of surprises there. The crush, the export side, so what the usage is versus the supply, unless they feel there's some adjustments to be made on the harvest, and what was in the stockpiles at the end of the year going into this year. So we'll have to see how that plays out. The acre number, like I said, we've got a lot of estimates out there. We've got a couple numbers put in front of us: 92 million acres for corn, 88.7 for beans is what the Reuters averages are. We'll see if that comes through, but that's been talked about here now for quite a while. So I'm assuming, barring a major surprise there, that's probably pretty well figured into the marketplace.
Well, and I look at today's moves as well with the big down day, especially in soybeans and wheat. It feels like maybe, I guess it's hard to speculate. Is this a 1 day move? Is this the start of a bigger correction ahead of the Thursday numbers, or what is it? And to me, it just feels like this. It's just the outside forces weighing on us to the downside here. It doesn't really give me a whole lot of reason to panic. It's maybe just a reminder to be vigilant in these markets.
Again, we'll see what tomorrow gives us in terms of that. I would assume we get some more export sales stepping in. We'll have to watch those numbers tomorrow in the morning. Obviously, if they bought them today, they're 40 cents cheaper today. Key support levels are here. So we got to make sure we hold. If we break, then the technical side can even kick in a little bit further tomorrow. I've been watching 1660 on May for quite a while. I've talked about that number. We're down poking at that today on the soybean side. Same thing with wheat, just kind of working the bottom of the range, maybe putting a little bit of a double bottom on some of these front month charts here. So, tomorrow might be a pretty important day, and we'll have to see if this thing can hold together. And if it doesn't, again, you'll see the computers kick in and the money flow and push this thing. In my mind, I think it turns it into a bit of a value longer term if we do break through here, especially given that global supply for both that corn or for beans and wheat.
Very, very true. And I think it'll be interesting to see just where the momentum takes us here this week. But obviously, with a lot of things at play, a lot of news items, a lot of big reports coming up as well. It's always good if I'm a producer looking at my marketing plan to at least keep an eye on things here this week and have that plan in place.
Again, that's still going to be the key, staying disciplined. There's still good value out here. how do you take some of that risk out of it, whether you're making some sales and picking up some puts, and puts are expensive. I was doing some strategies where we're challenging the market to go higher with sold calls, but then there's going to be the margin component, but they're explainable margins when we're talking $7, $8, $9 calls over top of certain grains, over corn. So there's a lot of different pieces to put together here. Just make sure you're having the conversation. Otherwise, you look at some shorter term things. If you're just really worried about the report, you got May options out there. There's weekly options out there that can at least get you through the next 15 to 20, 30 days, and then we can see where this thing really wants to shake out.
Well, John, let's flip over to livestock today. Cattle market, no doubt, probably reacting to that cattle on feed report from Friday. What was your takeaways from that report, and then the reaction that we saw here today, which really wasn't too bad when it was all said and done at the close?
Yeah, I was actually kind of happy the way cattle. We saw some doom and gloom predictions out there with that placement number at 9%, and top end of expectations, well above the averages, and that could have really put some pressure on that feeder market. But with the weaker grains, that helped out. And at the same time, maybe some of that was already thought in place here. Those big placement numbers like that sometimes are more reflective of what we got going on in pasture conditions and things of that nature. We got a dry southern plains. Those cattle are going into the feedlot, so a little heavier than we anticipate. So I really like the way cattle hung in there today. Front months, we're still going to be tied to the cash market here. We'll see what we can get put together this week. 138 last week, probably going to stay about the same. Demand's ticked up a little bit here recently with the choice carcasses. So it'll be encouraging to see, where this cattle market wants to get to. But again, it held in there pretty nicely today overall.
Very, very true, John. Well, I know as well on the hog side, a good strong day there today. Pork cutout values higher once again. Really, this hog market, kind of a shining star the last couple of sessions. I mean, what's your thoughts with what's going on at hogs, getting ever closer to the cattle market in prices, especially some of those summer months?
Yeah, again, we saw good strength, contract high closes on those summer months again today, at least July and the June contract. We got quarterly hogs and pigs on Wednesday, so that'll be kind of in the focus of the market. Probably the biggest thing, we know the supplies are going to be tight, but do we start seeing some growth? Do we keep a few more breeding animals around? That's going to be a pretty interesting number to watch, obviously, with the price of, feeds where they are and the input costs where they are, and these elevated hog prices helping out at least in the summer months. But, we don't have a whole lot going into 2022 right now, or 23, to encourage those hogs to come on board. So that'll be something we're going to watch closely in that quarterly hogs and pigs. Right now, though, front end, it's about demand. It's about the cash market. Retail values were firmer again today after a good week last week in those pork values. And we're seeing some pretty decent movement overall. Throw in that the technical picture, it sure feels like the summer hogs are going to be a lot easier to get them to 130 than it is to 120 in this window. But don't be a little surprised with some profit taking and squaring up going into that report, because we're stretching this market out pretty aggressively here. And it's going to set itself up for some type of correction, especially if the numbers aren't where we want them to be.
Very, very true. Over on the dairy side today, John, looked like a little bit more mixed activity there. What did you see in dairy to start the week?
Dairy's been extremely choppy, kind of working that basically a fairly good range. Talking about that April contract, 24.50 on the top, 23.50 on the bottom, maybe down to 23. We're pushing limit down today. Saw a little pause in cheese trade that was a little bit softer, and butter trade was down about a nickel. So that brought some profit taking out. Again, here's another market. We've got some good length into it. We're looking at the end of the month, looking at the end of the quarter, trading near all-time highs. And getting a bit range bound here. So we'll have to kind of watch how this wants to play out over the next few days. Just felt like today was another day for some profit taking, as we saw the commodity sector just soften in general today.
And as well, we mentioned the crude oil at the top. That was one of the big movers to the downside today. Stocks kind of mixed to some lower activity there. Really, just feels like that outside macro market, as we kind of mentioned, just kind of playing off the headlines, and be interesting to see where that goes this week, where the dollar goes, et cetera, et cetera. Especially as we head into these reports, just it feels like a lot of potential for volatility to remain and maybe even be elevated here this week, John.
Yeah, it's going to be especially elevated this week in terms of where the money wants to flow to on the grain side with the report coming at us. And two, we're also watching what's happening in terms of the headline side. Obviously, do we get some peace talks possibly brewing in the Ukraine? that'll still be, still going to take time regardless. President Biden put his budget idea out there yet over the weekend here earlier today with looking at some different taxes and new taxes coming in. Does that make the market a little bit anxious to pull some capital gains out? There's a lot of different things that are going to be moving here. And again, trading hour by hour, headline by headline, going to keep this volatility in. It is not going anywhere. And as long as we continue to see some of these bigger environment or macro environment things come into play, the choppiness in this market's just not going to go away.
Very true. John, any other final thoughts for us here on this Monday?
Make sure, again, a lot of things happening this week. Make sure you're looking at your situation, evaluate where the risks are, see if there's a way to shift some of that risk off. Going into this report, if you finish up some sales, if you're a little bit light, but find that reownership out there. Look at some different put strategies. You might have to get creative. You may have to take some risk on to put some floors in, but at the same time, at least we're talking putting risk in at historically high prices. So there's some opportunities that are still there. Again, when we got at these prices at these levels, our risk is to the downside. So we got to make sure we can keep it, under control, as we saw with beans today. What didn't take much, and boom, 40 some cents lower.
Well, John, great advice as always. If folks need a little help with their marketing plan, they want to reach out to you and the team there at Total Farm Marketing, what's the best way to do that?
Sure, love chat with them anytime. Feel free to give me a call, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. Don't forget about that website of ours, totalfarmmarketing.com. A lot of great information, free trials to our daily newsletter. Take advantage of that, because again, free to our producers.
Well, John, we appreciate the time as always. Thanks for joining us on this Monday, sir. Have a great rest of the week, and we'll talk to you next week.
Sounds good. Have a good week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the show on this Monday, March 28th. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.